Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Friday, the 30th of January. Starting off with Amino Technologies, where you can see that we've got quite a sprightly chart here, bear trap reversal, exhaustion gap reversal in October, which started off the latest bull move, little bull flag there above the 200-day moving average, now at 101, and then progress since then in recent weeks above the £1.20 level. That's now the stop loss on an end of day close basis at the floor of this rising October price channel, and we're looking for £1.55, £1.60, while the £1.20 level holds, so risking 7p to make another 25, 30 pence or more on the upside over the next couple of months. Be cautious on the shares, maybe wait for a weekly close above the £1.30 level, but with this the golden cross that we had in November and this very sharp looking breakout here, it looks as though the bulls have already done enough of the dirty work to get this stock to the upside. The bulls did very well on Fitbug at the turn of the year, struggling a little bit more at the moment. We had that spike up to 25 pence in November. Situation here is that probably you could say that we've still got a rising trend channel situation, probably support coming in through the 5p level and the top of the channel towards 20p. The only hitch here is that yesterday, Thursday, we had a failure below the 50-day moving average of 9.68 pence, and for cautious traders, that might be the area or the feature to break before they consider going going long again, given that we've already had quite a pullback and a rocky ride since November. A plus point, by contrast, is that support, even on this dip, came in above the 200-day moving average at 3.27 pence. So a bit of a mix there, but probably on balance, I want to wait for a break of the 50-day line. Just because obviously the upside here, if it does break, would be 20 pence, 25 pence over the following couple of months. So you're not, even though you're giving away the initial upside, you should in theory have that much more security in terms of the bull call at that point. Finishing off with Sound Oil, which is a stock which is, I know, private investor favorite. Shares have been consolidating for the best part of 6-8 months. We had the surge from February to June, peaking out towards the 14p level, and it's understandable that you would have a consolidation of such a big move, shares sort of doubling, tripling in a short period of time. The plus points at the moment are really the way that you can draw a rising trend channel from February last year running through around the 9p level. That's at the moment the technical stop loss. A weekly close below that would be negative. Or at least would suggest that there's a delay to the upside scenario. Otherwise, we've got the rising 200-day moving average, which normally will drag the shares higher, will be seen to drag the shares higher over coming weeks. And in fact, the configuration that we have here between the 50-day and 200-day moving averages suggests that we'll probably get a golden cross buy signal sometime next month. But so the best way forward here is probably to either buy on dips towards the 9p level for the last year's channel, or look for a weekly close above the 200-day moving average shown here in black at 10.74 pence. The target in either case, once the shares get going again, would be a journey to the top of the channel from last year, which is sort of 15.5 pence, 16 pence on a 2 to 3 month view after the 200-day moving average is cleared. That's it from me. More updates at masterinvestor.co.uk, where you can find information about attending the event. It's on April the 25th at the Business Design Centre. I'll be charting away all day that day, and you can see me there if you book a ticket from the website.